Hello and good afternoon. Welcome to another edition of Analyst Insights. On this program, we are talking about our capital markets and investing on our local markets. So today, I'm joined by my colleague Rufaro, as usual. Welcome to the show, Rufaro.
Thanks for having me, Ranga.
Yes, so we've got quite a number of issues to discuss today. But before we dive into those talking points, maybe let's just share with you some statistics for the week that you may want to know. So the market was firm as you would expect, with Zimbabwe All Share Index up 11.89%. The rest of the top stocks, the top 10 and the top 15 were up by around 11.78 and 11.28, and also the medium cap stocks were also up. And it looks like the major driver has been what's happening on the payroll market and the exchange rate in general. You would see there that the payroll market rate actually showed the Zimdollar sliding by 21%. And on the auction rate, that's where a major movement actually occurred, almost 30, just under 35%, with the auction rate increasing to 1,888 from 1,404. On the payroll market, it was 2,800 when we were reporting last week. It's almost 3,400, 3,500, depending on where you are. And then in terms of where most of the activity was on the stock market, as expected, Delta remains the top trader there. 51% of the trades went into Delta. Also Tanganda was significant, then Hippo, BAT and Econet. It looks like this is going to be the picture we're going to see unless there are major transactions taking place in other stocks, especially after the migration of a number of stocks onto the Victoria Falls exchange. And then there's a graph showing the auction versus the payroll rate, and for the longest time the gap was huge. And after the movement we saw last week, where the rate actually on the auction rate moved from 1,400 Zimdollars per United States dollar to just under 1,900, the gap is actually narrowing. Maybe there's already a talk about convergence. It's one of the issues that I'll discuss with Rufaro here. And as you'd expect, the stock market is playing catch up to the activities on the payroll market. The orange line you are seeing there, that's the Zimbabwe All Share, and the blue is the payroll market rate, which is slightly above. But the good thing is there's some catching up that the market is doing, and the movers I had spoken about them, but the major movers were ZB, CBZ, and MASH. But the volumes they were quite thin. The big volumes are just going into those counters that we've already spoken about, and it's very, very interesting to note that even as the market is moving, in terms of the USD market caps, these are the numbers you're seeing. Delta just under $1 billion, and then Econet 486 million, and so on, using a rate between 3,200 and 3,400. Just in terms of some history there, you'd see the graph of Delta and Econet market cap wise over the years. You'd see that Delta at some point peaked beyond 1.6 billion rather in US dollar terms. So we're still talking of a market below $1 billion. It just shows you the potential that that stock can achieve. The same can be said about Econet, which at some point peaked beyond $1 billion US dollars. It's now around 500 million. So that's the kind of potential that we have. Anyway, so much about the statistics for the week. Maybe let's just dive into the discussions for this week, Rufaro. What do you make of what has happened on the auction, that movement in the rate, and the talk now about convergence? Is it likely to happen? And what's been the reaction of the market to the developments on the auction market?
So I think that the development on the auction is positive, because normally when we've seen the rate run on the parallel market, we've seen a lot of outrage from the central bank and treasury pointing a finger to the business community for profiteering, for trying to discredit government policy. But I think in this particular instance, the move that we've seen on the auction is an acknowledgement that perhaps the managed rate, because effectively the auction, what we call the auction rate, is a managed rate. And I think that the gap between the managed rate and the power market had become so big that it was creating pricing problems across the economy, and a lot of economic actors were moving away from doing any business in Zimdollars. And if the gap remained at those kind of levels, it would just quicken the demise of the local currency. So I think what the central bank has done by pushing up the auction rate by this huge 30% plus in 1 week is they're acknowledging that the auction was overvaluing the Zimdollar significantly, materially, and that this is not serving the economy well. I think they're moving to converge the parallel market and the official markets, and this is a positive step. And if we see a similar movement over the next couple of weeks, then what that will do is it will lend more credibility to the auction, and much more trading will go through the auction as opposed to the opaque parallel market. So I look at it as a positive development. I look at it as an acknowledgement of the reality on the ground around the fair value of the Zimdollar, and I'm encouraged by the development, and I'm cautiously optimistic that they'll carry on moving in what I see as the correct direction.
So the other thing that we have been seeing on our market is whenever the rate moves, whether on the parallel market rate or on the parallel market or on the auction, prices in Zimdollars obviously will inevitably move as well, and that has been the feature of the past 2-3 weeks. And again, we started hearing concerns from the policymakers and pointing fingers at the business people. So how would you react to that? And also, so what does it mean now when officially they've allowed the Zimdollar to depreciate or on the official market, and the ensuing or the most likely result of prices actually responding to that as well? How would you react to these worries that maybe you might see another claim down? And do you think the police signals that we are seeing so far are pointing to that, or maybe there's a more accommodative kind of policy environment?
So I think one of the features of the Zimbabwean macroeconomic environment, especially from a policy standpoint, is that it's important to discount what is said by the policymakers and to focus more on what they actually do. So yes, there were some voices that were saying, business is misbehaving, these prices don't make sense and that sort of thing. And we typically hear that kind of language whenever the rate runs away. But what's important is, what action is taken. So I think in the past we've seen some very dramatic action, like when there was an announcement that with the immediate effect there would be no lending. And that was actually very bad for the financial services sector, and thankfully that policy was reversed within a short space of time. But this time around, the language around pointing fingers at the business community has not been followed up with policy action. In fact, what is the actual action that we can see is positive which is the movement we've seen on the auction rate. So I think that perhaps this time around the understanding from the policymakers is better. And perhaps the engagement between the policymakers and the business community is also better. So we're not going to see, touch wood, any dramatic negative policy actions.
Okay. Yeah, it's interesting because a related policy measure that we saw was the removal of import duty on certain basics. Mm-hmm. So instead of going all out declaring war against business people and accusing them of profiteering. And you know what we saw with June 2007. They've actually gone on a different direction, where they're actually saying, okay, every holder of free funds should be able to import certain basics without having to pay duty. And obviously from the industrialists, then you started hearing some cries over what that would mean to their businesses, the future of the manufacturing businesses in the country. So given that development, what do you think it was a smart move, or is this whole thing with tampering with import duty and kind of controls whenever we want, do you think is the right policy measure that can take the economy ahead?
So, obviously, I think policy consistency is important, and one of the challenges we have here is that we've seen a lot of chopping and changing. But having said that, I'm in support of this policy of removing duty on basics. I think it's a fantastic development. My view on the, as far as the manufacturers are concerned, is that they've been coddled for the longest time. These are business people who have had access to cheap money on the auction for almost 2 years now, and they have had the benefit of the protection of these tariffs on these basic commodities. So it's been incumbent on them to build robust businesses that are regionally and globally competitive. So if they cannot compete with imports, without the benefit of duties, then I believe they shouldn't be in business. The country and the consumer is better off getting the commodities from the best, producers in terms of quality and price. So this idea, that we need to have our own industry supplying many of these basics, I don't agree with it. I think that there are areas where Zimbabwe has competitive advantages on the global stage, whether it's in agriculture, because we've got all this arable land, in mining, where we have the benefit of this rich resource endowment. The things that where we are naturally more competitive than other countries. We can't be the best
in everything. Okay.
So as far as the manufacturing sector is concerned, there's many things where it doesn't make sense for us to try and compete with South Africa or the Chinese, and we shouldn't be, coddling just a handful of businesses at the expense of everybody.
Yes. So maybe let's go back to the market, which is our forte. What are you seeing in terms of flows and the activity that you see on the market right now? How would you characterize it, and what kind of outlook do you have on the local capital markets?
So there's a lot of trapped Zimdollar capital that is being managed by regulated asset managers, and they have, so the Zimbabwe Stock Exchange is by far one of the best destinations for them to ring fence those Zimdollars against inflation and devaluation. So that's explains all the interest we're seeing in stocks like Delta. And it also explains why when you juxtapose the graph of the all share index and the parallel market, they seem to move in tandem. Because it's what's happening on the parallel market in terms of excessive supply of Zimdollars is also true for the local burst, so they tend to move in tandem. And I think it's also a positive development that in the past we've had the stock market being shut down and capital market players being accused of all kinds of bad behavior when the market has moved in tandem with the power market rate. But I think we haven't seen any action against the market, and touch wood, we won't see any action against the market. I think the understanding from the policymaker about why the market moves the way it does is better. I think there's been engagement by the leadership of the ZSE and other players in the capital markets explaining, the flows and the price action that we've been seeing. So I am also cautiously optimistic that we're not going to see any policy actions that is designed to disturb the revaluations of stocks in line with inflation.
Yes, and then talking about the issue of the currency, do you think the ZSE is better off trading in Zimdollars or in USD? Because I'm seeing the kind of activity that we are seeing there. Yes, it could be fine. People trying to hedge their positions and preserve value in Zimdollar terms, but that is translating into some meaningful activity on the market. As a market player, which currency would you prefer that we
Look, I think it's not a secret.
use?
The dollar is dying.
Is it really dying? Because there's a police initiative to actually support it.
I'm notwithstanding that. I think the Zimdollar is dying. I think it's only the right
naturally. So, irrespective of what the policymakers will do, you think it doesn't have legs to stand
We're
on?
at 76.7. The last snapshot taken by Zimstats showed 76.24.
Okay.
So 76% of the economy is USD, 24% is Zimdollars, and the trend is in one way. And I think there's no one in our economy who, given a free choice, would choose to transact in Zimdollars instead of US dollars. So that's where we're going. And every time we have this significant money supply growth that makes the rate run away, it just people lose. Already I think faith and confidence in the local currency is extremely low. And I don't think that. And I think that the continued devaluation of the Zimdollar isn't helpful to the faith and confidence that's missing there. So the question in my mind really, is when will people completely reject Zimdollars? Is it going to be a relevant transacting currency 3 months from now, 6 months from now, a year from now? I don't know. But I think at some point it's just going to devalue so much and so quickly that just like we saw in 2008, going into 2009, people just say, what, I have no use for this currency.
So thanks so much, Rufaro, and to our viewers. You heard it from our guest analyst here. To him, it's about when the Zimdollar is going to have its last day. Do you agree? Do you disagree? Please feel free to drop some comments on the conversation that we've had today. Otherwise, thanks so much for watching. See you next time.